Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. So, I've missed you all, it's been about 2 weeks since the most recent video that we've done on this channel. However, looking at the charts, it feels like it's been absolutely months. We've been trending sideways for about 32 days now, and we are making a new update because we believe in the next 48 hours, this is all going to change. In today's video, we're going to be talking about Bitcoin and the cryptocurrency markets. What are my thoughts and expectations, as this is what you voted to see first over on Twitter. And tomorrow, if you've been bored of all of this sideways, boring, choppy price action for Bitcoin with not a lot of new stuff to talk about, then you're going to want to watch tomorrow's video. We're going to be talking about a bunch of new and interesting charts regarding 2008 and the economic data in 2008 and how this looks exactly the same as what we're currently seeing. Basically comparing 2008 to now, but not necessarily looking at charts, more so looking at economic data fractals. This is going to be a very interesting new topic, but of course, all of you guys prefer crypto than my economic data videos. So this is what you voted to see. Let's talk about what is happening in Bitcoin right now. So like we've been saying for the past 2 weeks or so, everything has been a little bit stablecoiny, with Bitcoin having a tendency to trade around 26,100 or so. Of course, you can see we've had a few liquidity grabs to the upside, a few liquidity grabs to the downside, and in the past 12 hours or so, we have had a move back up to 27,400. Now, a little bit later on in this video, we're going to talk about why did we move up to this specific level. We're going to talk about what does this mean on the daily time frame, weekly time frame, bleeding into the monthly. But let's start off with the lower time frames. What caused this most recent move back up to 27,000? Well, a lack of liquidity in the markets and a small amount of volume coming in terms of the open interest for Bitcoin futures. This did have a rather significant spike on the 4-hour time frame. This wasn't followed up with continuation. This almost instantly dropped back down to the downside. If we are coming over to the 4-hour time frame and looking at volume, you can see this was not particularly a rally that was supported by volume. We didn't get continuation. We didn't have higher highs in terms of volume. In fact, we had a bearish engulfing, very slightly bearish engulfing candle in terms of the volume, and we've already started to wipe out a lot of the gains which are cascading down to the downside. Now, if we move on to the Bitcoin liquidation map, you can see where this starts to develop a problem. In the past 12 hours or so, we had a quick liquidity grab to the upside, and we're going to talk about exactly what levels we reverted into in the higher time frames a little bit later on in today's video. But what you need to know is in the immediate short term, some short bearish positions were deleveraged and taken out of the markets, and a lot of long positions have started to take place. And currently, the long mentality is dwarfing the short mentality, and this is typically the sign of a crowded trade. Now, if we are looking at cumulative long positions which have taken up in the market, we have seen a lot of long liquidations in only the past 4 to 8 hours or so since Bitcoin has moved from 27,400 down to 26,600. But here is what's interesting. If we're coming over to the liquidation map over on Binance, you can see this parabolic curvature line starts at round about 26,500 for where cumulative long positions will be deleveraged from the markets. And you can see moving up in terms of the liquidations and moving down in price. If Bitcoin moves down to about 26,000, which by the way is not obscene, this is the central tendency line which Bitcoin has been trading at for the past 32 days or so. If Bitcoin only moves down about $800 or so and we move down to 26,000, then that is about 700 million worth of potential long positions which could unwind, get liquidated, and get deleveraged from the market. And that could definitely have a trickling off effect. You can see a price drop down to 25,600, a mere $1,000 from where we are right now could liquidate 1 billion worth of longs from the market. So between this 26,400 to 26,000 region, this is definitely a very dangerous place. If Bitcoin finds itself moving back down to this level, then we could see a lot of positions unwind. We could see a lot of Bitcoin sold back into the market, and we could see a lot of long positions get absolutely wiped out of the market as fear starts to step back in and we do move down into this box and potentially longs start to cascade. Right now, as you can clearly see, if we're looking at the left side of the screen and looking at cumulative long positions, and we're looking at the right side of the screen and looking at cumulative short positions, right now being long, being bullish is definitely a crowded trade, and coming into the next FOMC, that is definitely something to worry about. So there we go, that's what's happening for Bitcoin in the lower time frames. We're now going to move on, talk about what is happening right now with the FOMC, talk about the higher timeframes for Bitcoin. Honestly, like I said, there's not too much to update in terms of the lower timeframes, which is why I haven't said much in the past 2 weeks or so, except for over on Twitter and Discord. Really, I have sat down in front of my PC in the past 2 weeks or so, and I've been looking at the charts, I've been looking at on-chain, I've been looking at the news, and I've been thinking to myself, is there anything that I can make a topic about? Is there anything crypto related that I can make a video about which will entertain my audience and provide them with value, provide them with insight, provide them with something new to think about for the markets? And every single time I sat down to try and make a video, I was just like, there's nothing to talk about. If I'm going to make a video, I'm just going to be stretching some piece of information which isn't really important, or maybe I'm going to be making a 1-minute video and saying, oh, hey, this is this, but there's nothing else to talk about. And I don't really want to do that. But let's move on from here. The FOMC meeting is now only 48 hours away. The last time we looked at Fed futures, the Fed futures were telling us there was about a 21% probability of a rate hike in September's FOMC meeting. Now, while the curvature line for the overnight rates has not really changed, we're still expecting a terminal rate to top out for the Fed funds around about 5.6%. The markets are no longer assuming that there's going to be a 21% likelihood of an interest rate hike. It's currently at 1%. Despite the fact that CPI recently pushed up to 3.7%, the markets are now not thinking there's any likelihood whatsoever of the Fed increasing the interest rates even further, which I find kind of interesting. Now, if you are a veteran of the channel, you'll remember this chart because we drew it out absolutely ages ago. We previously detailed months and months and months and months ago when the interest rates were at much lower levels. I remember we had this box drawn when the interest rates were at 2%, and we were saying the interest rates were going to come up to between 5.25 and 6.5%. This is where we've been saying for the past year we believe the rates were going to come up to and top out at. Like I've been saying, I believe we top out somewhere in this box, and when we do get that next rate cut, that is when all hell will break loose. And we'll talk more about that in tomorrow's video, where we'll be talking about all of the important 2008 fractals in terms of the economic data, and what has previously happened when there's been interest rate cuts. This will only be a small topic of tomorrow's video. We've talked about this before. Like I said, we've got a bunch of new economic data, new charts, new 2008 fractals to go through in tomorrow's video. So what do I think happens with tomorrow's FOMC meeting? Well, I think it's very 50-50. I, for one, don't believe there's going to be any chance of an interest rate cut. However, looking at Powell's most recent commentary, he quite recently came out at Jackson Hole and stated, while CPI was coming down, that they welcome the new developments in CPI, but they are prepared to raise rates further if appropriate. This is data dependent. If we start seeing the data come in and show that inflation is no longer sustainably coming down to our objective, then we'll look at raising rates further. He said this before CPI rushed up to 3.7% from 3%. This is a topic we talked about back in June in a video titled Inflation Bottoms in June. We were looking at the CPI index. We were telling you that inflation was going to start coming up every single month throughout the rest of the year, and this is exactly what we have seen. Now, before we move on to the daily and the weekly time frame in terms of the news for crypto, it is not looking good for Binance. In only the past 12 hours or so, the SEC has asked the court to order an inspection into Binance US. And the SEC also came out and said that they found it very difficult to ensure that Binance was fully collateralized following an audit. Once again, more Binance FUD. It's not really looking good for Binance whatsoever right now. Now, let's move on to what's happening for Bitcoin on the daily time frame. Like we talked about a little bit earlier, we had a slight liquidity grab to the upside. We are still trading around this central tendency line, around about 26,000. We have had a few liquidity grabs up, down, and up with a liquidity grab to the upside in the past 12 hours or so. But here's what I want to show you. If we come over to this falling wedge chart, we have had two falling wedges form for Bitcoin since about March time. Now, earlier on in March, we formed this falling wedge, which is a bullish pattern, typically breaks to the upside. And as you can see, we broke to the upside. We then formed another falling wedge. However, this time we broke to the downside. Now, if we do extrapolate this bottom trend line on this falling wedge, you can see within the past 12 hours or so, we have reverted back into the falling wedge. If we clear up the chart patterns, you can also see we've beautifully reverted and made a lower high in the bull market support bands. If we load up the EMA ribbons, you can see we've retested the long-term moving average and made a lower high in terms of the EMA ribbons. So in terms of the path which Bitcoin is making, you can see since we have formed this secondary falling wedge up at 31,800. It has been highs, lower lows, lower highs, and like we talked about, around about 30,000 or so when we were expecting this massive cascade to the downside due to a lot of these macro charts, such as the monthly stochastic RSI coming to the downside. We detailed this back up at 32,000 or so, letting you know that this was going to be a problem. Since we have made this video, we've had a large move to the downside. In the lower time frames, we have had a small move back up to 27,000. We're believing this is going to be a failed move due to what we talked about earlier in terms of the on-chain metrics and the long liquidations currently being in a crowded trade. In the higher time frames, guys, we're just still seeing that continuation, lower lows and lower highs like we have been predicting in the charts. Now, if we do come back over to the daily time frame, I do want to detail, if we do come over to the stochastic RSI, this is another cause for concern. Right now, the stochastic RSI is topping out around about 98 to 100, while the price touched 27,400. Now, the last time the stochastic RSI managed to become this overextended was pretty much where we topped out prior at 31,400. This is really a dramatic overextension on the stochastic RSI on the daily. The 4-hour stochastic RSI is turning to the downside. It has quite a good amount of room to move to the downside, which is definitely a cause for concern, considering how if we just move down to 26,400, we may be beginning a long liquidation cascade, which could see Bitcoin absolutely liquidate a lot of cumulative long positions in the market. Now, if we do come over to the monthly time frame, like we talked about before, and we're going to very briefly touch on, in the monthly time frame, we are still seeing this monthly stochastic RSI fractal continue to bleed out to the downside. However, on the weekly, the only bullish chart I really see over here is the stochastic RSI on the weekly starting to turn back up to the upside. Now, the only way I see us getting continuation on the weekly stochastic RSI, because bear in mind, the higher the time frame, the more significant, and the monthly is crossing bearish. The only way I see us getting more continuation back up to the upside is if the Fed cut the interest rates, and I don't think that's likely. And you might be thinking, Cowboy, you've previously said so many times how if you cut the interest rates, that's bearish and recessions happen. That is true. However, if you are looking at how the markets move following an interest rate cut, you can see they often rally about 30% to the upside following an interest rate cut. But then, the week later, after you've had that dead cat bounce following an interest rate cut, when the interest rates continue to get cut, the markets tend to follow back down to the downside after a short rally back up to the upside. So really, the only way I see this getting continuation is if we get an interest rate cut, and that is really not in my base case for anything that's going to be likely happening for the next FOMC meeting. I do want to show you that we are forming a new hidden bearish divergence for Bitcoin. Following this most recent rally that we saw back up to the upside, you can see the oscillators have pushed back up once again. If we are looking at the chart, since we made this most recent high at 28,200, we have made a lower high in the past 24 hours down at 27,400. And if we are looking at the oscillator, while we're making lower highs in terms of price, the oscillator is actually pushing up and making higher highs right now, which is a sign of hidden bearish divergence. Like I said earlier, I don't think this rally is going to last due to the fact that we have no new open interest, we have no new money flowing into Bitcoin right now. And in terms of the macro, we're still looking at all the same things. The monthly stochastic RSI is still coming to the downside every single time this has happened. This has either been the top in a bear market, or this has been a top in a macro dead cat bounce before having a dramatic move back down to the downside. Like we also recently discussed, looking at the weekly time frame on the Gaussian channels, we are still in these Gaussian channels. That is not a good sign on the weekly time frame. There have been times where we've flipped green on the Gaussian channels, and if you do move back into them, that's typically a sign that you're going to get continuation back down, and this fired too early. We do have this strong horizontal level of support to contend with at this moment in time. But like I said, here's what's interesting about this. Earlier on in the video, we talked about the potential long cascade of liquidations which could take place as soon as Bitcoin moves down to 26,400. If it moves down to 26,000, then a lot of liquidations are going to take place in this market, and that could allow Bitcoin to start having this liquidation cascade coming into this monumental support box. So this could be very, very interesting. We've got a lot of bearish factors potentially lining up coming into a bullish trend line. So I think really in the next 48 hours, maybe it takes a little bit longer, maybe 72, maybe 4 days, etc. But I think this 32-day period of sideways, choppy, boring price action is coming to an end very, very quickly, my friends. In the macro, my thoughts haven't changed. If we're looking at the total cryptocurrency market cap, you can still see the head and shoulders is developing very nicely. If we're coming over to the total altcoin market cap, you can still see we are bleeding out, making lower lows and lower highs. We're just kind of sitting at this last level of support before we believe we're getting ready for the final capitulation down into new bear market lows. If we're coming over to the Bitcoin dominance, while Bitcoin has been moving up for the past week or so, it has not been all peachy for altcoins. The Bitcoin dominance is rising, making higher highs and higher lows across the board. That is why, while some altcoins are doing well in the past week or so, you really have to look at the weekly time frame and zoom out and see that a lot of these altcoins that have been doing well for the past week have been getting obliterated for the past 2 months or so. Some of them aren't even doing that well. Cadena, for example, is still just making lower lows and lower highs all across the board. But in general, most of these altcoins are just continuing to bleed out, making lower lows and lower highs. Every time they have a short rally to the upside, it always seems to be short-lived at that. So that's all I want to talk about in terms of the cryptocurrency market. In tomorrow's video, we'll take a little bit of a deeper dive into some more important markets. We'll be updating the iShares TIP ETF. We'll be updating what happened today with the US 2-year government bonds moving up to 5.5%, with the main topic of tomorrow's video being a great overview and deep dive into all of these 2008 similarities which we are currently witnessing in the market. So if you've been watching Bitcoin for the past month or so and you've been bored by the fact that there's no new information, if you've been wondering where's the most recent cowboy update, it's been 2 weeks, he hasn't said anything. If you've been waiting for something new, interesting, exciting, which we haven't talked about before, then you're not going to want to miss tomorrow's video, because tomorrow's video, we're going to talk about a lot of new information, new charts, new thoughts, new economic data, and not only how these charts look from a charting perspective, but from a fundamental perspective. How do all of these tie together? How do all of these affect how I believe the economy is going to be moving into Q1 of 2024, and why I personally still believe we're in a 2008 type scenario where we're really at the end of a dead cat bounce and we're getting ready for that next major move back down to the downside. So for today, my friends, that is all I've got. I look forward to seeing you in the next update. We will get a KDA update out very soon. Tomorrow's video, a little bit more important. We want to talk about the economic data before we get any altcoin videos out. But like I said, for today, my friends, that is all I've got. If you enjoy the content, you know what to do. Make sure to smash that like button. Make sure to subscribe to the channel. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. New videos on this channel every week. If you go back and watch my old videos, once a week, and there's a new video every week. For today, my friends, that's all I've got. It's been your boy Cowboy Trades. I'm out. Peace.